The Reserve Bank predicted 0.4% growth and instead it hit 0.8%. Inflation was meant to be cooling and instead it's heating up. In today's episode, we unpack why July's rate cut might be off the table and what it means for your mortgage.
We are back in your life, and today we are discussing what will happen with the OCR announcement with CPI up, GDP up. Michael, what's going on?
Yeah, look, it's been a pretty turbulent couple of quarters for the New Zealand economy, but I think that there's a lot of data out there that says things are moving in the right direction, but there's also a lot of data out there that go, maybe there's some not so good stuff going on as well. So it's been a really confusing time. So we'll try and get to the bottom of it as much as we can, and then we're going to try and get out our crystal ball and see what will happen at the OCR.
Yeah, I mean, GDP is an interesting one because sentiment when we're talking to Kiwis, it still feels pretty bloody miserable out there.
Yeah.
But then you're going, we're growing? Yeah,
I think it feels like nothing's growing. It still feels pretty miserable. I mean, today outside there's a Category 5 hurricane, which doesn't help as well. But I think it's because it's where we're growing from, right? We've gone backwards, and to tell people, okay, the headline data is growing. I mean, that's all well and good, but people aren't economists. They don't live in an economist's head. When you say GDP grew by 0.8% over the last quarter, they go, whoop-de-hell, man. What does that mean for me, right? And I think it's because of where we're coming from. We're coming from high interest rates. We're coming from cost of living. We're coming from low spending. We're coming from unemployment rising. So to get 0.8 forward, don't get me wrong, great news, but we've got a long way to go.
The other interesting component is the predictions were 0.4%. It was double.
Yeah.
Double's quite a lot.
Double is quite a lot, but we've got to remember that a lot of stuff hides in the data, and not every sector of the economy will grow at the same pace. And this might be somewhat controversial for, everyone who owns and operates a farm, but although farming contributes a lot to the economy, it's not a hugely productive business. What I mean by that is you can run a farm of 10,000, head of cattle with 4 or 5 people, right? The size of that business, the turnover, the volume doesn't require a lot of employment. So it's not a hugely productive asset in terms of employment in the economy.
Sounds like you're talking about property.
Well, it is one and the same. We have a really diametric economy where, well, not diametric, but kind of our economy is really centered around 2 major sectors, right? Property and farming. And neither of them are particularly productive. If you look at the likes of tech, manufacturing, service businesses, neither of them are those.
Something else that gives me a bit of PTSD is inflation was in September 2022, 7.2%. September 2024, we're at 2.2%. Life was good. In the last quarter, we have jumped, Mike. Inflation is now, over the last 12 months, 2.5%. Is that cause to be worried?
No, I don't think that's a cause to be worried. In the short term, I think there's going to be a spike in inflation. We've got a war going on in the Middle East that is now going to start impacting oil prices. Yes, oil prices going up on its own is going to be a cause of inflation. That's gas. Everyone's got to use petrol to get around. So that is going to be a major cause of inflation in people's pockets. But it's the secondary impacts of what oil prices rising will do, right? You've got to think about shipping. You've got to think about the cost of producing any good that has plastic in it, right? You've got to think about all of the things that oil is a component of. And that is almost everything in the economy.
Yeah, it is really interesting to see what is happening at the moment in terms of those prices starting to move. Butter. People keep banging on about butter, how expensive butter is. The thing that's interesting about butter, Mike, butter prices going up is good for New Zealand, isn't it?
The price of butter increasing is a good thing for the New Zealand economy. It may not be a good thing for everyday New Zealanders, right? And again, you are talking sentiment versus data, right? And you interact with the price of butter a lot more than you interact with a digit of GDP going up. So you will feel the price of butter going up. You will not feel 0.8% increase in GDP over a quarter.
Well, the big question here, Mike, is so what happens next with the OCR? Where do interest rates go? And we will talk about that after this break.
There's a little bit of uncertainty about what's going to happen with this official cash rate announcement. Is it going to go down? Is it going to go up? Is it going to do nothing? More than ever, your mortgage strategy matters. So get in touch with the team at Lighthouse Mortgages. We can give you advice on what to do with your current mortgage, what should you do if you're going to get the next mortgage, and what are you going to do if you want to buy a house. Click the link below to get in touch. Now, back to the episode.
So, Mike, the OCR announcement is coming out on the 9th of July. We just talked about inflation. We've just talked about GDP. My question to you is, will that impact their decision come the 9th of July?
Yeah, it will absolutely impact their decision come 9th of July, right? Because inflation going up, that means you raise the official cash rate. GDP going up, that means you kind of cautiously watch the official cash rate, because we want the GDP to be going up. You want a certain level of inflation in the economy, but they've got to keep it within that target band, right? And they have worked really, really hard and like taken a lot of criticism, taken hard decisions to get that kind of that inflation level back down to its target band. We even lost the Reserve Bank governor halfway through it, right? So they will absolutely be playing on their mind in terms of what they will should be doing. There's a bit of uncertainty with this one as to will it go up or will it go down?
What about what's happening in the Middle East, the US's involvement, the impact on oil prices? Has that got any impact on the Reserve Bank governor's thinking?
I think it will definitely have an impact, right? All you're talking about there is just inflation shocks. Like everything you've just talked about there with the Middle East, oil, that is just an inflation shock on the supply side, basically. So I would say, it'll be weighing on their mind, and that'll be giving them a lot of pause.
So the question is, what is going to happen on the 9th of July? Is the OCR, I think there's two options, right? The OCR doesn't move or it goes down 25 basis points. So there are two options?
Well, no, there's three options. It can go up, not move, or go down.
Okay. Likelihood of each?
33%.
For each?
Yep.
There's a chance the OCR goes up?
Yep. So I think there's, let me rephrase that. I think there's about maybe less than 33% it goes up. Maybe about 20% it goes up and the rest is split evenly.
Okay. That's probably quite surprising to a lot of people. We probably just got into, I think the OCR has gone down 225 basis points since its peak. So it's probably it's the highest probability in a long time of the OCR going up.
Yeah, I think it'll be surprising to people, or I think it'll be a little bit shocking to people, because when the official cash rate usually goes up, you are having a much different experience in your day-to-day life and in the economy as a whole. But
life
again,
is good.
Yeah, life is usually really good when the official cash rate starts kicking up, right? And we definitely haven't got there yet. But what you've got to remember is the official cash rate is designed to control inflation. It doesn't really care about anything else. So when you look at GDP going up, when you look at unemployment figures, and when you look at, economic utility data and that sort of thing, none of that really matters, right? It is just inflation. So if we just look at inflation, if I'm the Reserve Bank governor and I'm ignoring everything else, I go, okay, well, inflation just went up. Probably about an 80 or 90% chance that oil is going to increase inflation again. We've got rates going up. I can probably look forward and see a bit of inflation coming into the economy. What's the quickest way to stop that? I give everyone just a quick shock. I go, actually, you know what? I'll kick interest rates up a little bit. Spending flatlines. I would say spending absolutely flatlines if that happens in the economy and inflation goes down. Again, you've got to look at like imported versus domestic inflation, but there's a chance that happens. Yeah.
And what is the impact on like a 1 year fixed interest rate? So what are we seeing at the moment?
I actually don't think it'll move at all, right? Like
with any honest, of the outcomes.
Yeah. I don't think it'll move very. You might see a slight increase if it went up, maybe like 10 basis points. You might see no change if it doesn't change, obviously. And then maybe 10 basis points if it goes down, like maybe 5 basis points if it decreases. I actually don't think there's much chance of your residential rates moving much at all. Yeah. You'll get the floating rate, which will shift, but I think that's probably about it. The market has priced in cuts already. So there's not a ton for it to move further down unless the forecast changes. If the forecast changes and the Reserve Bank goes, we're actually going to take the official cash rate lower in the future, the market will reprice and then your rates will come down.
Because we've had discussions in the past where we're like, how low will we be by the end of the year? Say if we're sitting at 1 year rate 4.85, there's been discussions going, we might be pretty close to 4.
I was calling 4.1, and now I think I'm probably calling 4.7. Yeah, by the end of the year, I think is probably where we're at. Because if we get no change or an increase. If we get no change, we're kicking everything out by 3 months. If we get an increase, we're basically kicking the bottom out by 6 months.
Yeah. And that change is because of inflationary pressure and the economy growing a little bit.
Yeah. So, I mean, the economy growing a little bit, it's been trending in the right direction. It's not huge amounts of growth, I would say. And we're starting from behind the start line, because we've retracted. So, we haven't retracted, but it doesn't feel like we're in the kind of near the finish line in terms of where the race is. So I would say most of it's to do with inflation.
Yeah. Awesome. Okay. So really interesting to see. There are a lot of moving pieces when you look at 2025. Everything's just taking a lot longer than we all hoped it would, Mike.
It's frustrating. A lot of people are frustrated, yeah.
Yeah, so we'll have to see what happens with the OCR announcement on the 9th of July. And on the 10th of July, your boy Jared Kerr, chief economist at Kiwi Bank, he's back in our life. He's going to be on the podcast. So make sure to subscribe, review, and like so you don't miss that episode. And we'll catch you next time.
Cheers.